please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Diwan now joins us for some fundamental stock picks and the overall market setup. Prakash, good morning. The stock that I want to chat about first is Ashok Leyland. Fourth or fifth year running that has made new lifetime high. Your thoughts on what's going so right for the stock and how to approach it from here?
I thought Sonia was the one who's going to shoot this at me. Yes, so there seems to be this very distinct pickup in the HCV segment for Ashok Leyland. And if you recall that recent interview that one of your colleagues had with Mr. Dasari, where he says that I don't have capacities and there's much more demand. The reason is very simple. The underlying utilization levels in the mining and the logistics sector, that's undergone a big change. I mean, we had mining which was down for 4 years and all the bans on iron ore and coal, and suddenly all of that is taken off. So the steel cycle is actually the one that's responsible for the metal revival. And the moment mining goes up, the first segment to get benefited is the HCV segment, because you need to take the ore out of the pit head and take it to the smelters. The other thing, Anuj, which I think Ashok Leyland's benefited from is that they become much more leaner in terms of the balance sheet for the last couple of years, which means that even a slight improvement in margin has helped them very distinctly to show that kind of EPS traction. But if you ask me, at the current market price, I think all the good part is priced in. There's a recent report with a new 160 target, but that's 2020. Yeah. So it's not something that people need to look at and say, oh, this is going to happen next week. And that's the whole thing about this. Now it's time for the other players within that segment to also start seeing a lot of rub-off benefit. So I won't read too much into these reports, but it is fully priced in. Okay, yeah, JP Morgan has actually upgraded Ashok Leyland this morning, but I take your point. Actually, Anuj stole the words from my mouth, so I have to ask you about something else. Two stocks that have done exceptionally well lately, Interglobe, which has now hit a new high, 1300 plus. Avenue Supermarts is also there, right? So what are we looking at in terms of both these stocks now? So as a matter of disclosure, Interglobe, I have a position in the name. And my sense is that if you were to fly any sector, particularly the Mumbai-Delhi sector, you would realize that airlines is the new railways. The way you see the same issues which you face with other means of transport, public transport like buses and railways. Today you have congestion, you have delays, you have people losing tempers. All of that is there. And the whole idea of this Udaan is taken off so well. First it looked like a theoretical exercise that we would open this up and people would be able to participate. But it's actually taking off in a very significant way. And Interglobe, it has had some setbacks in terms of some engine failures, and that's kind of put down a couple of sectors where they are seeing some slack. But the utilization levels, more than 1,000 flights a day, these are metrics that you don't get in the airlines business elsewhere so easily. So I think it's definitely on a roll. And I would believe that the difference between Interglobe and Jet and SpiceJet would dramatically increase in terms of them improving far more rapidly than the others. Okay, we're going to stick to transportation, I think, today, Prakash. Because my next question for you is one of your favorite stocks, Maruti Suzuki. 9,000. What's it going to take to have a sustained run above 10,000 for this one? Still about what, 9-10% off that 10,000 mark, the 52-week high. No, absolutely. So, it's like this. You need to put in perspective what's brought it down from that closer to 10,000 levels to 8,600 or wherever it was recently. And the answer to that is that when the last round of selling happens in particularly the ETFs, it's and some of the actively managed funds, especially on the FI side, we've seen that it's all the best stocks that see some sort of sell-off, which kind of does give the opportunity. That's what you absolutely bring things down more from a flows perspective and not from a fund. There's absolutely no news flow, but there's a lot of FI flow out of Maruti. And Maruti, the biggest trigger would now be, I don't know if you recently read that their new Dzire has actually outdone, the Swift Dzire sales have outdone the earlier model in spite of a price hike, okay? And they're moving every model, they're moving every variant, they're moving towards a premiumization goal, which means that the average realization that Suzuki will report by March, my guess is, will probably one of the record highs. Of course, they've been making new records, but it will be distinctly ahead of the Hyundais of the world, the Mahindras of the world. And what's the big trigger for them to move back to 10,000, to answer your question? It's any announcement related to the EV side of the business. You know, if they were to introduce any new variants in some of their models or all their models, I don't know what happens on that count, but I'm sure they're working towards it very aggressively. It's right now under wraps, but as soon as that announcement comes through, you'll have to give it back to Suzuki Maruti saying, okay, you are numero uno and you need that premium.
Okay, by the way, the SGX Nifty is now up only about 18 or 20 points. So after two back-to-back good days, today could be slightly more tricky. And let's see, 21 points higher is what we have now on this SGX Nifty. Prakash, IT has made a big comeback. Of course, all through the last quarter of last year, it was only about IT stocks, NIIT Tech, Tata Elxsi, and of course even the large caps doing well. Your thoughts? Do you think that that trade now could be reversing, or is that still a good trade?
No, I think it continues to be a pocket of hope of sorts, if not too much of promise, Anuj. And the reason I say that is, we've not seen that ownership levels go up dramatically. While TCS and Infosys and Tech Mahindra have made some new highs, they are on a comeback trail of sorts. There's a host of IT companies like Mindtree and Hexaware, Sonata. These are niche players. Persistent Systems, for example. I mean, they have such strong franchises which still need to, get re-rated upwards if that leads to traction on the EPS side. So I think the first quarter numbers might not be very impressive because calendar 18 has not started off with too much of announcements on new order flow. But during the year, middle of the year, the US will start, seeing that kind of revival in terms of orders and the spends. So once that happens, I don't see any reason why people would lose faith in IT. In fact, it would continue to be a safe haven of sorts at this current juncture of volatility.
Okay, well, we have 6 more minutes to go before the pre-opening rates kick in. So let's see how they shape up. But just getting to a couple of more stocks today, ACC and Ambuja will definitely be in focus. Is it really a big deal that the merger has been called or is on hold for now? I mean, or is it just
I think it's a sentimental,
for news purposes
it's just a sentimental weakness, and people are talking about now that there won't be any synergy, as if there were lots of synergy. Because when you don't, the whole issue with these kind of businesses is that if you don't kill one of the brands and then decide to go ahead with one, the synergies will never happen. If you have to run two parallel brands, you'll have to continue investing into that. The only thing that probably makes things easier is the supply chain side, your warehousing, your storage. All of that can, probably have some common denominators, but that's not going to result into a tremendous amount of savings. And they have units in different locations which are complementary. There's no overlap at all. So I don't see any, and it's more of Holcim, Lafarge globally still maintain separate headquarters, as somebody pointed out last night, though they happen to be the same. So there are lots that happens at the top, which doesn't let things go as smoothly on the mergers. So this is probably one of those examples.